Recently, I designed a digital token system for an investment fund. In this video, I will share the exact steps to design a digital token system for traditional investment funds. The goal is to increase the revenue while making investing accessible 24/7. This is done to create a digital token architecture that provides a money market fund to attract institutional investors while complying with every financial regulation and subsequently outperform traditional systems. A money market fund is essentially a safe investment vehicle that holds cash and short-term loans. Essentially, I transformed their entire operation into a blockchain-based token system. At the beginning, it is important to understand the structure of traditional investment funds, which operate much like legacy postal services. Investors can only trade during business hours, minimum investments exclude smaller players, and compliance requires extensive legal review of every transaction. The tokenization opportunity became clear when I mapped their value flow. By converting shares into digital tokens, we could eliminate these friction points while actually increasing profitability. For setting up the economic model, my first step involved comprehensive value flow analysis. I dissected every revenue stream, cost center, and operational bottleneck in their existing system. The breakthrough came when I realized we could restructure their fee system. Instead of a single 0.4% management fee, I designed a dual fee structure, 0.35% management fee plus 0.15% technology fee. This seemingly small change increased total revenue to $5 million annually, which is a significant 25% improvement. Think of it like Netflix unbundling cable TV. Same content, better delivery method, higher value proposition. The token supply architecture required precise calculation. I settled on 100 million tokens with 1:1 parity, such that each token always equals exactly $1 in net asset value. This eliminated the complexity of fluctuating token prices while maintaining the psychological simplicity investors expect. The daily yield distribution mechanism automatically compounds returns. Instead of quarterly dividend checks, investors see their token holdings grow daily through automated reinvestment. Imagine your bank account balance updating in real time as interest accrues. Next, predicting institutional adoption required sophisticated modeling. I analyzed 10 years of the client's historical fund flows, studying adoption curves from my previous consulting work on financial product launches. The Monte Carlo simulations tested 10,000 different market scenarios. Monte Carlo simulation is essentially running thousands of what-if experiments on a computer, like stress testing a bridge by simulating every possible weather condition and traffic load. Examples can be, what happens if interest rates spike 3% overnight? How does the system respond to a market crash? These simulations revealed critical design requirements. The circuit breaker system emerged from this analysis. If the fund's net asset value fluctuates more than 2% in either direction, automatic safeguards activate. Think of it as financial airbags. They don't prevent accidents, but they minimize damage when turbulence hits. This goes beyond theoretical modeling. I was engineering a system that needed to protect billions in institutional capital while enabling features traditional funds couldn't offer. Next came the biggest challenge, creating incentives that reward useful behavior instead of speculation. I designed 3 core incentive mechanisms. First, the liquidity reward system offers 0.05% bonus returns for investments exceeding $1 million. This operates like Costco's bulk pricing. Larger commitments get better rates, which stabilizes the entire fund. Second, voting rights scale with holding duration and not just token quantity. An investor holding tokens for 2 years carries more weight than someone who bought yesterday. This prevents short-term speculators from hijacking long-term strategy decisions. Third, the early access privileges create loyalty without speculation. Current token holders get priority allocation for new tokenized products, similar to how Amazon Prime members get early access to deals. If you have seen the entire video till now, you will realize how this tokenization project transformed a traditional investment fund through systematic engineering, wherein the restructured fee models increased revenue 25%, automated compliance reduced operational overhead, and 24/7 trading accessibility expanded the investor base. This framework now serves as a blueprint for institutional tokenization projects. The combination of automated compliance, fractional ownership, and enhanced liquidity creates competitive advantages that traditional funds cannot match. As regulatory frameworks mature, expect more institutional funds to adopt similar token-based architectures. Hope you found this video informative. Thank you for watching. Do subscribe to my channel for watching more videos like these.